the issues that we're discussing. So, Emily, I don't know whether this is a final question, but if we come back in 3 years, what would you say about the progress look like? And what are the signs that the Asian organization, we're talking about the region now, are genuinely becoming more resilient? And you're talking about the investor as well, but how we see the focus in ASEAN region. All the ASEAN organizations becoming more resilient, and what ACCA encouraging members and partners like AFA to do next. How we encourage listeners here to take more action.
No, and the dream or the goal would be for in 3 years' time, the real progress would be moving beyond the compliance that we have spoken about to actually creating competitive advantage by implementing these systems. And you speak about progress as a big question. And many companies treat sustainability still as a box tick. Our recent research at ACCA, which is Sustainability Reporting, Track Your Progress, shows that while 71% see regulatory compliance as a key driver, the real leaders are those that harness regulation to actually build resilience and unlock sustainable profits.
Hello and welcome to this podcast collaboration brought to you by ACCA and the ASEAN Federation of Accountants. I'm George Thompson, Public Affairs Manager for ACCA in Asia Pacific, and today we're talking about a topic that's become impossible to ignore in ASEAN, and that's climate resilience and what it means for the finance and accounting profession.
Hi George, hi everyone. I'm Sylvia Vivianti, just for MITP. So when we talk about the topic today about the climate, across Southeast Asia, climate impacts are showing up in everyday headlines. I just got with details about the storm last week that we have in Jakarta, but also some flooding that disrupt supply chains. We know this problem, and also heat stress that hit the productivity, and also drought and water risks that affect food prices. I think this is becoming a very prominent news in every media. And lately we see that some severe storms affecting businesses and public.
And Vivi, what's striking about it is that, as you say, there are examples happening day to day already. These are not abstract future risks. These are things that are affecting the region's economic well-being already. They're operational and finance risks in the here and now. And for organizations, whether they're private sector organizations, public sector, not-for-profit, resilience is becoming a board-level question. And the questions we're hearing at boards are, can we keep operating if we don't manage these risks? Can we insure effectively? Can we invest? Can we adapt fast enough around the changes that are happening with climate?
Well, I agree with you. And that's why where the accountant come in. And because resilience isn't only about the physical infrastructure, but it's also about planning, governance, data, control, and also the transparency. And this is all the finance function.
Yeah, absolutely. So today we're delighted to be joined by Emmeline Skelton, Senior Subject Manager for Sustainability at ACCA. She has been closely involved in ACCA's work on climate.
Thank you.
So Emmeline, in this episode, we would like to unpack exactly what climate resilient. You know this term, and everybody keep talking in the news. But what's really mean with the climate resilient? And what's ACCA report is arguing, and of course, crucially, what finance leader and also professional accountant in Asian can do, of course. And hopefully, should be down to earth, everything practical, not theoretical, because this is very important for the listener. Listening. Sure.
So let's get into it. Emmeline, to start us off, when ACCA talks about climate resilience, what do we mean by that, and what's changed that makes this such an urgent agenda for organizations?
We define climate resilience as the capacity of an organization to absorb, adapt to, and recover from climate-related disruption. So what has changed is that we've moved from climate risk from being a future scenario to climate volatility being a present operational reality. And as you just spoke about the recent storms in Asia, many of the economies are structurally exposed. So whether through agriculture, manufacturing concentration, tourism, or these low-lying delta regions. So climate resilience is no longer just an environmental issue. It's operational, financial, and strategic. And for accountants, this shift is also in the global reporting landscape. So in 2023, the International Sustainability Standards Board, that's the ISSB, under IFRS, introduced two landmark standards. So that's the S1 and S2. So S1 requires organisations to disclose sustainability-related risks and opportunities that reasonably affect enterprise value. And S2 focuses specifically on climate-related risks and opportunities, including governance, strategy, risk management, metrics, and targets. So together, these standards connect sustainability directly to enterprise value. So this is from cash flows, asset use, cost of capital, and long-term viability. So they're about transparency, accountability, and decision useful disclosures. So it's not voluntary storytelling anymore. And this is what the point is. And we're saying at ACCA, resilience has moved from this narrative now to a financial imperative.
That's the different methods, and because people often hear about the resilience and associate it with the disaster recovery. We're talking about operational, finance, and strategy for the climate resilience. But it's becoming now a crisis issue, which is not only the specialist of sustainability team who's supposed to be responsible with these issues, but actually it talks about the strategy and finance as well. So in your report, what would you say the most important insight? I mean, the thing you want the CFO and audit committee or even finance team to have a takeaway from the report.
Thank you. And you speak about preparedness, business crisis management when there is an operational disruption caused by climate change, such as floods and storms. So my research report was on business resilience and climate resilience. And the insight that really stood out was on the preparedness gap. So how prepared are organisations in climate disruption? And shockingly, globally, only about 20% of climate risks across their operations. And actually, even fewer of these organisations have actually tested their plans or rehearsed what happens if disruption hits. And as you said, what about the finance function? So for CFOs and audit committees, the takeaway is simple. Climate risk is a business risk. So under your accountability doesn't stop at operations. It stretches across your whole entire value chain. So that means, for example, if a supplier in a flood-prone province in, say, Thailand or Vietnam is disrupted, investors expect that risk to have been identified, stress tested, and incorporated both risk management and financial planning. And on top of that, there's also a growing legal and societal dimension. So climate litigation is also rising worldwide. So regulators, investors, customers, and even affected communities are increasingly holding companies accountable for things like failing to disclose material climate risks to investors, or those making net zero commitments without credible transition plans, and operating in ways that disproportionately harm vulnerable communities. So it's not just about whether a company acts, it's whether it acts sufficiently.
Emily, and you touched on it a little bit there, talking about Thailand, for example, and to turn it to our region now, the region of Southeast Asia. So in your view, what makes climate resilience or the climate resilience challenge in Southeast Asia distinctive? So, for example, the types of geography we have here, the growth patterns, infrastructure issues, supply chains.
We speak about S2 and the supply chain, and Asia obviously is a global hub with the supply chain risk. And actually, especially big corporations and finance teams need to really embed resilience into that governance and the risk management framework to really understand supply chain. And I think a lot of multinationals perhaps sit in Europe, those tier 1 and tier 2 supply chain risks are not fully accounted for. So again, it's about better financial planning in the region. And actually things like true resilience really treats climate risks like liquidity, credit or operational risk. Increasingly, it's acting with all three of these dimensions.
So you say it's not only more climate risk, and it's also the way the risk intersect or relate to the urbanization, trade, dependency, and also development needs. So I think a question, our listener would like to have now is what accountant and finance professional can do that genuinely shape the outcome. We talk about the operational, finance and strategy, but so this is more beyond of writing a sustainability report. It's not only about the sustainability report itself, but for the finance team, what can they have value of resilience? How they're supposed to do to act as a finance team and adapt with the, you mentioned about the adapting, so how they adapt to the resilience itself.
So I think the real impact comes from the accounting session is when the finance professionals move from reporting risks to shaping the strategy. So at ACCA, through our sustainability reporting, track your progress research and our transition to net zero work, we've seen time again that accountants essential to turning sustainable information into real resilience. So where do we start? It always starts with data integrity. So too many organizations still rely on spreadsheets and manual processes for sustainable data. So that just isn't decision grade information. You need finance finance grade systems in place. So things like supply chain visibility tools, climate scenario modeling, and that integrated planning and building those internal control frameworks. So if sustainability information is going to actually influence actual decision making in your organization, start off with data integrity. Secondly, think about professional skepticism. So accountants are trained to challenge assumptions, and that's exactly what needs to happen here. So ask questions. So what questions can you ask? So are revenue projections realistic across different climate scenarios? Are asset lives assigned to tightening carbon regulations? Is your supply chain mapped to end? So under the F, which we've spoken about, sustainability information has to connect directly to enterprise value. So that means climate risks can't sit in a separate sustainability report. They have to feed into an investment appraisal, budgeting, and strategic planning. So that's a lot of information I've just told you. But if you look at our research, we've grouped the accountant's role into 3 broad themes. So we've looked at, first of all, strategic maneuver. So that helps shape sustainability strategy, and that spots risks and opportunities and uses insights to guide decision making. So secondly, we've looked at operational excellence. So that's embedding sustainability data into forecasts, cross-functional decisions, and planning systems. And lastly, and most importantly, it's about building trust. So that's ensuring compliance, robust controls, assurance, and ethical use of information. And that really is how resilience is built. So it's not just through disclosures, but through disciplined decision-making, governance, and actions. And that's exactly where accountants, and that's supported by a lot of our work in policy and insights at ACCA, which helps the finance team really build that capacity building work and actually shift outcomes.
Emmeline, and as you say, there's a lot to grapple with there for an organization that's coming new to this, but it's because of the variety of different challenges. Some of it's just the raw mechanics of building your data, your processes, but some of it's even cultural, as you say, thinking about how you build that kind of skeptical, inquisitive mindset and asking the right questions of yourselves, of your partners as well. And you highlighted the ACCA reports that are available to help give a bit of a roadmap for how to pursue these processes. And I'd really recommend listeners to look at that. In terms of turning how we turn this into a sort of practical action, because you talked about a number of steps there, inevitably when humans or businesses come to something for the first time, they always just want that little helping hand for the first couple of steps. So if you were advising a CFO or a finance director in ASEAN and they said, look, I get it, this matters, and we need to improve our resilience practices, but what should we do first? Could you give us a kind of practical sequence plan for the first few steps? Let's say it's the first 3 months to get your organization moving on this.
Sure. So momentum really matters. So what you do in the first 3 months, as you said, can really set the tone for a multi-year resilience journey. So in month 1, I'd start with a governance and gap assessment. So that means running an IFRS S2 gap analysis and asking practical questions. So the questions can be things like, is climate risk really embedded in board oversight? Are responsibilities clear? Are physical risks like floods or extreme heat and transition risks like carbon pricing or regulatory change properly assessed? So, for example, if you take a manufacturing company in Vietnam, they might discover their climate risks aren't even recorded in the enterprise risk register. S2 makes it clear that a gap has to be addressed. And again, we have ACCA research which can lay out how to do this gap assessment in a policy and insights toolkit. So that's what I'd start with first. So moving on to month 2. Month 2 is all about supply chain visibility. So you need to map your critical value chain nodes. So that includes your tier 2 and tier 3 suppliers. So let me explain that. A tier 1 supplier are the companies you buy from directly, and tier 2 suppliers provide goods or services to your tier 1 suppliers. So you rely on them even if you don't deal with them directly. And tier 3 suppliers obviously feed into tier 2. So let's give a simple example. So in an electronics manufacturing, your tier 1 supplier might assemble circuit boards. Their tier 2 supplier provides the microchips, and the tier 3 supplier produces the raw material for those chips. So a disruption anywhere, like a flood affecting a tier 3 agricultural input, can ripple all the way up and impact operations, revenue, and even how you report under S2. So many ASEAN economies are so integrated into these complex supply chain that mapping them isn't optional, it's actually essential. And this actually, technology can help here. So whether it's geolocating suppliers or running scenario analysis. Again, we've got some research at ACCA on climate technology with a climate tech needs assessment, which accountants can go on and do this as a free resource. So once you've grappled with these 2 steps, lastly, in month 3, importantly, it's about connecting sustainability to finance. So make sure those risks feed directly into your financial planning. So rising temperatures might increase cooling costs. Is that in CapEx planning? Or extreme weather could shorten asset lives? Have you stress tested that in impairment models? And transition plans often require low carbon investment. Is that capital, for example, allocated? And S1 and S2 make this explicit. Your financial disclosures must reflect your material sustainability risks. So the front half of your report, your narrative, and the back half, your financials, need to tell one coherent story. So without this, so I think these 3 months should really get you going and very busy.
Absolutely. That's a clear list. Thank you. And I imagine, the plan looks different depending on the maturity of the company, and a large cap versus an SME, public sector versus private. But the key thing, as you say, is just to have a plan and make sure you're operating to it to get these processes started. Didi.
Okay. Well, a lot that I grabbed from you, Evelyn, but we already discussed a lot of issues. I think the listener want to talk more about the hard bit. Well, all the issues that we just talking is all the hard issues. But how about the data and the decision useful information? Where do the organization most commonly struggle? We always we mentioning about how they take or make a decision, but how about the report? Whether it can identify where the organization most commonly struggle, especially with the availability of data and also decision useful information. Is there any data gap? You're mentioning that the most important thing is about the integrity of data. So how do you elaborate about the data gap, measurement, and also the forward-looking assumption? You're mentioning about at the end, based on the 3 steps, there is a trust. So it should be based on the assumption after we do this better thing, and then there should be coming a trust. So how can financing improve trust without the over-engineering?
So really looking at how leaders should really think about also financing resilience and the challenges which obviously I outlined in the 3 crucial steps. One way that you can also think about this and looking at the whole resilience is actually thinking about the return on investment and actually protecting value. So moving on from the strategic steps. So it's thinking about those resilient investments and actually avoiding losses and reduced risk. And the issue that we found in the recent research on climate technology and companies investing in net zero is the accountant struggles to justify to the board or in the work that they're doing in their reporting to really show how investments in climate change really show a return on investment. So quite simply, putting solar panels in or low carbon technology to reach these net zero goals, which you report on because you've got to report on your targets and data to reach those targets. You generally have to make these investments to get there in 10 years' time. However, as we all know, in the accounting world, there really isn't this integrated return on investment or an alternative return on investment, which can really show how embedding these strategies we discussed can create long-term sustainable value. And I think that this is an ongoing issue, and the role of the accounting profession is to show through helping build better data integrity, building a better internal control framework where robust sustainability data can feed through. That will build trust, and through building trust, you can obviously have a better business case for adopting things like climate technology to actually help your organization not only build a better resilient business, but a business that can last for the next 5-10 years and do those projections.
Thank you, Emmeline. And we've started to talk now about, you mentioned some of the climate tech that's available, the idea of investment. I mean, clearly that's also one of the perhaps biggest mental hurdles for companies thinking about how they address this, because resilience often does require investment. And sometimes that investment needs to be made before the benefits are obvious, measurable. So how does ACCA's research suggest that leaders should think about financing resilience in their organizations, making the business case, prioritizing CapEx and dealing with the uncertainty that can be inherent in that?
So as I just explained, it's really about that integrated return on investment, or that view of how to look at an organization's return on investment. And actually in the recent climate tech research done by ACCA, we look at how that is measured and captured by looking at all of the different aspects of creating sustainable value. And the lessons really are quite clear that resilient investments often pay off in avoiding losses and reducing risk. So even if those financial benefits aren't actually immediate. And going back to that reporting, IFRS S2 adds another layer. So disclosing credible transition plans isn't just now a regulation or regulatory box ticking. It signals to investors that capital is being deployed responsibly and actually strategically. So that transparency lowers perceived risk and strengthens market confidence. So in other words, to conclude, resilience isn't just insurance, it's actually smart strategic capital allocation.
Yes, it's very intriguing. I mean, the issues that we're discussing. So, Emily, I don't know whether this is a final question, but if we come back in 3 years, what would you say about the progress look like? And what are the signs that the Asian organization, we're talking about the ratio now, are genuinely becoming more resilient? And you're talking about the investor as well, but how we see the focus in ASEAN region. All the ASEAN organizations becoming more resilient, and what ACC encouraging members and partners like AFA to do next. How we encourage listeners here to take more action.
No, and the dream or the goal would be for in 3 years' time, the real progress would be moving beyond the compliance that we have spoken about to actually creating competitive advantage by implementing these systems. And you speak about progress as a big question. And many companies treat sustainability still as a box tick. Our recent research at ACCA, which is Sustainability Reporting, Track Your Progress, shows that while 71% see regulatory compliance as a key driver, the real leaders are those that harness regulation to actually build resilience and unlock sustainable profits. So a really simple example is imagine a mid-sized agricultural business in a delta area. So they've started mapping climate risks across their farms, invested in flood resilience infrastructure, and are working closely with their suppliers to share real-time weather data. So over 3 years, that business has not only reduced losses from extreme weather, but is also able to offer more reliable supply to international buyers. So turning resilience into a market advantage. And you talk about partners. Collaboration, I think, is another hallmark of progress as well. So today, only around 30% of companies say working with peers is key to overcoming sustainability reporting challenges. So in 3 years, the companies we'd call progressive will be actively sharing insights, co-developing best practices, and embedding decision-useful end-to-end information systems across their operations. And also the importance of leadership engagement. Leadership engagement will hopefully have risen sharply. So from the research, currently only 16% of senior management and boards actively use sustainability information when making decisions. So real progress means that number is much higher. So sustainability data becomes a core input into capital allocation, investment planning, and strategy. And we also talk about the role of policymakers. So policymakers are also playing a role. So for example, in your region, the Securities Commission Malaysia has emphasised capacity building and skills enhancement during their review process, helping companies make reasonable and meaningful progress on consistent, reliable reporting. So ultimately, progress isn't about perfection. It's about fewer surprises, stronger governance, and finance teams equipped to use sustainability information to shift outcomes. And actually, mitigation really reduces impact. So resilience ensures the system keeps working even when shocks hit. So in a volatile region like ASEAN, the distinction isn't academic. It's about protecting people, communities, and long-term prosperity.
Thank you very much, Emmeline, and for all your insights with these answers. It's been very, very helpful, very clear, and very practical. Before we wrap up, you've mentioned a few ACCA research pieces where a lot of these insights are captured. Can you just remind us of some of the key titles we should look out for?
Yes, and hopefully we can link them onto the podcast. Would that be possible?
Absolutely.
So we have a sustainability reporting Be Prepared guide, which will help you understand the S1 and S2. We have some toolkits available. So for those starting the progress, we have Weather in the Storm, which has a business continuity and crisis management videos, an introduction to the topic. And also we have a business impact assessment and toolkit to help you guide through those first steps on building resilience and preparedness in your organization. So please go on to these toolkits. They're really easy to use and download.
Well, thank you, Emmeline, and we will do. And thank you for your time today.
It's a pleasure. Thank you for inviting me.
So we have to say to our listener then, George. So all our listeners, if you are part of PAO, a finance team, or a leader roles, I hope you treat this podcast as a call to action. This podcast is actually a thought leadership, so we encourage all of you to think about one action that you can take this month, whether it's improving risk governance, strengthening climate assumption in budgeting, or starting a simple scenario discussion at the board level. I know this is quite hard and quite an intriguing issue, but a challenge with greater impact will benefit more to the organization and society. So this is a call to action to all of your listeners. George?
Good points, Vivi. Okay, that can be the next podcast episode that we do. To everyone, thank you very much for joining this podcast from ACCA and AFA. And should you want us to discuss further issues on accounting, please do let us know. You can propose an issue to be discussed by filling in the link below, and we'll see you next time. Thank you.